for gold to rally back to the highs, you need a serious catalyst. Every time that gold heads back to the all-time highs, you have something like Russia invading Ukraine, or 2020 concerns about, printing press going crazy, right? You have these fears that come into the market that really get us back to highs. So until something surfaces, or at the very least, until we get a technical breakout, I've mentioned here on the stream that a break above 1980 could be interesting for perhaps a start of a move back higher, just reading the chart. But again, that's wishful thinking. And the way that I trade, I'm not necessarily going to place a trade off of what I think it could possibly do. I'm going to wait for it to show me signs that it's making that move. And to be fair, guys, and we do have the breaking news. Sorry about that. We're going to be jumping into the meeting minutes here in just a moment. Let me see if I can pull something up here in just a moment. Let's go Forex Factory, see if we can find it there. To that point, Chris, watching to see basically what the chart does. If it breaks these lows, it could very quickly make a run back down to further lows. Initial reactions here. You seen anything move off the bat? Of course, it takes a minute.
I'm still watching. I'm looking for Financial Juice real-time news. I'm looking at the numbers on the SPYs. Here we have participants noted concerns. Getting a lot of red stuff here. Federal debt limit may not be raised in a timely manner, threatening significant financial system disruptions, tighter financial conditions. So that's Fed. We've had Fed speakers all week, which is classic Fed timing, right? Where it's like we have FOMC minutes today. We've had Fed speakers all week long. They're just saying the same thing. They're pretty much towing party lines, saying we're going to pause. Market conditions and economical geopolitical conditions will kind of dictate what we do. But I'd say right now they're pretty comfortable with 0% to 5.25% in 14 months is pretty aggressive. I don't know. I mean, historically, other than Paul Volcker crushing the market in the 80s, I don't know what other tightening cycle we've had that's been this extreme. So I think a pause is in order. It's honestly, I don't know if you watch the CME watch tool as much as I do. I mean, every single day I'm checking out my trading rooms. It has been ridiculous. The changes you've seen on a daily and weekly basis. Like I said, I mean, right now the forecast is the Fed is expecting to raise rates in July by another 25 bips. And then if we cut in November, December, like the market's anticipating, or that the watch tool is anticipating, I just feel like that's the dumbest monetary policy I can imagine. Why would you raise rates another 25 basis points to just squeeze out everything, every last drip of these raises, and then just go back into cutting because the market's going to crash? Something like, it's just, exactly. I don't think the Fed's going to do that. I mean, it's been hard enough to navigate everything since 2020. And certainly their job isn't easy, but at the same time, I don't think we need to get into the mess and the murk of just doing something desperate. It's like, if they want to tame inflation, keep job owning. And that's what they do. It's called moral suasion, right? You get all this free mileage out of job owning. They were the last major central bank to raise rates, but they had the most anticipated movement globally.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert trader signals, you can use the Livechat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
You had all these central banks that raised rates ahead of the Fed in 2021 and 2022, right? 2022 was our start of the rate hike cycle. There were 3 or 4 months prior to the Fed raising in March 2022, other central banks stepped up, started raising rates. The Fed was the last one to raise rates. Now we hit a pause, and we're probably just going to hold. And like New Zealand raised rates last night, 25 basis points. The ECB, the Bank of England, still going to raise rates to try to tame inflation. So a lot of central bank action right now, and the Fed, I think, is just going to stand still and say, look, all this crazy stuff is going on. We'll monitor. It'll be data dependent. We'll see what conditions lie. But I think raising again would be a big shock to the market at this point.
Right.
Sorry,
And I just want to, No, you're good. You've got great information. I was just trying to keep tabs on everything moving. Some people in the audience are saying nothing happened. Guys, here's the way meeting minutes, if you're newer to this stuff, meeting minutes is a report. It's basically like if you would have a company meeting or something and somebody were to take notes and then drop those notes on your desk. It takes the market some time to read through it, and it's not so jarring as something like NFP where you get jobs numbers dropped on somebody all of a sudden. So meeting minutes are not an immediate reaction. It is more a sort of a document that is key to what the Fed's guidance is looking like. Of course, if you guys have anything, please feel free to drop that in the chat, share with the community. If you see something of notable interest on the meeting minutes, please feel free to share. I'm trying to keep a tab on the what has happened with the markets, as sometimes as the story unfolds, we see some volatility. Of course, dollar still holding its ground well above that resistance around 103.6. But yeah, I mean, Chris, I'm generally with you in terms of the forward guidance. It would be very, very weird to see, hey, we're going to raise suddenly in front of a debt ceiling concerns, banking concerns, and then just turn around very shortly after and start cutting. I think that actually could invoke some more panic, and the Fed is very well aware of that. So I think that it's an interesting spot that we're at, and that debt ceiling. I mentioned earlier, I was on a podcast. I think that one thing about these meeting minutes, of course, they'll be useful and they'll be important, but the debt ceiling continues to be a really headline story that's going to kind of cloud the vision of what's going on with this stuff until further notice. So yeah, if you guys are enjoying the stream, make sure to hit the thumbs up button. And also, Chris has his own YouTube channel. We just got it dropped in the chat for you guys. If you'd like to subscribe to Chris, very knowledgeable dude. He's been trading for 20 plus years here and all sorts of different markets. So if you guys are enjoying Chris's commentary as well as my own, make sure to subscribe to both channels. So let's see what else. Pound trading lower here, staying just off the bottom here as we get going here. And then of course also Euro getting pretty beat up here, trading back underneath or shy of underneath this support zone. Yeah, against the dollar.
Dollar's on top of the food chain today.
It certainly is. So which currency pair specifically were you looking at again, Chris?
So I'm currently short euro dollar. I got limited out overnight with the New Zealand dollar drop on that rate decision news, the Aussie dollar drop. We had some channels that we're looking at in my trading room. We got limited out for like 150 and 185 pips on those two trades. Our dollar yen limited out around 139 that hit today. That was like a 350 pip trade or something like that. So we had some pretty good trades, just trading some dollar strength, getting some love, protecting profits. And yeah, I mean, I'm going to check on dollar Sing right now. That's been one that, that's a little bit more expensive to trade. But I like those institutional kind of, not exotics, but like, I lived in Singapore for a while. I got the feel for the exchange rate from 130 to 140. That's a pretty big one. So I was long going into that 130, 130.50 low. It's all the way up to 135 right now. And I'm trying to trade it back essentially to the midpoint. If you can bring that chart up, yeah, you've got it perfect there, Nick. 137.50 is a yearly pivot. That's a perfect halfway point. And then 138.50 is a big supply. It's a big supply level and big inefficiency I'm liking to see if it'll fill.
Yeah, the Singapore dollar, very interesting. I actually had a trade quite a while back on when there was something going on with the Singaporean stock market was having just a falling out back in 2020, I believe, and that was I haven't traded it very much since. It's a pair I don't usually trade. Not that I have anything against it, I just stick to the majors. But yeah, that's quite the move here, continues to push higher. And one thing I do like about this pair is that it does tend to trend very well. It seems like it gives you a nice, once it gets going, it just goes and goes and goes. So yeah. And then you also mentioned Euro USD. One thing I think for those of you guys who are watching EU here today, if we're able to break through this low, what it may do is it may, from a technical perspective, may lead to further sell pressure coming into this market as perhaps the breakout traders get a hold of it and look to trade this thing lower. Do you have a target on this Euro trade, Chris?
Anything below 106. Anything below 106, I'm putting trailing stop losses on. We sold this back up around 109. And yeah, I'm anything below 106, 105.50, I'm locking in profits using trailing stop losses.
Very nice. Very nice. I'm curious. I'm going to take a look and see what's going on with my euro yen trade. I took one this morning. Yeah, here we go.
Okay.
So euro yen, picked up euro yen on a pullback, not necessarily super correlated to the news, which is part of the reason why I liked it. Sure, the yen and euro both will be somewhat impacted by sudden guidance, but not necessarily as impacted on things like the debt ceiling, so on and so forth. I picked this one up long earlier this morning, just off a pullback to this support zone. So far, it's looking okay. I've got my stop loss in place. For me personally, watching the euro against the Japanese yen, if we're able to break through these highs, that's going to be where I'm looking to try and trail a stop on this and lock something in on that trade. It's a really small trade. I took it especially small ahead of big news like this, just because the market can be all over the place. And just to take a look here across the board, at the COT data as we watch some of these charts, you've got the Japanese yen, which is continues to be one of the more heavy sells in terms of institutional positioning. You can see we've got all the futures contracts pulled in here from the non-commercials, which is the hedge funds and large speculators in the market. They're very short on the Japanese yen as of the most recent filing. And on the flip side, they've got some positions long on the US dollar. Seems like they've got some interest in the euro. The pound for those currency traders is pretty mixed. You got 54, 40, 50, 46, really not too much of a preference there. So kind of interesting to keep tabs on that. And for me personally, with this euro yen, I'm watching to see if we could break higher on that one. This one is just a pretty clean price action chart for me. I like that pullback to support. And what a mover there today. I wish all my trades looked like this, Chris. Wouldn't that be nice?
Yeah, that'd be great. That's a great buy too, by the way. Did you get that right in around 149?
I did. I got it
Nice.
149.078, right at this support zone, and it kicked right off that level this morning. So
Perfect.
in a good spot there.
Yeah, great entry.
Let's see. I'm going to take a look around at some more charts here. What's going on with gold? Gold still hasn't moved too much. Is there anything you're seeing move off of this, Chris? It seems like kind of a quiet reaction.
Yep, I'm keeping an eye on the ETF. So we're getting a little bit of a fade lower. So the SPY retesting some lows, perhaps. We went from like 0.8, 0.85 to the downside. Now we're back up to 0.8. So I'm looking at the hour close. Usually with FOMC, even the rate decision in the press conference, that 2 to 3 o'clock candle taking us into the latter half of the day, 2 to 4. How's the market close today? Obviously there's some big gaps the last couple of days, right? SPY gap lower, push lower. Q's gap lower, push lower. There's momentum to the downside. I think that if we close red today or we close at fresh lows, so full disclosure, I have a trade today. I did some leveling in. I did a little a long put on Tesla for some short-term levels with the weekly expiration trading options. I'm looking at the 177.50 put, the 175 put, and hopefully for the 80 cents to $1.10 I took on those contracts, I can look at having like maybe a $3 to $5 credit if they fulfill. So I'm looking at some. I think we talked about this is also offline, but kind of the 0 days to expiration stuff and some of those gamma squeezes. There's some really big levels on the downside on Tesla. That again, I know the risk. I'm willing to take it. If we come back and retest today's lows at 178 or hit that 177.50. I will be out with some really nice profit today. So I'm looking to see if we're just fading that gap on Tesla and then heading lower. So the indices, if the SPY creeps up to that 1% to the downside for the day, if the Qs creep up to 1% downside for the day, I think we're going to hit some fresh lows on a lot of these stocks that opened up. So I was looking more bearish this morning to see if there's follow through. I didn't anticipate the Fed meeting lifting the markets up. I don't think the Fed's going to say anything the market wants to hear right now. Debt ceiling's front and center. The Fed's not going to come out and counteract that, in my opinion. So I think they're just going to keep everybody saying, look, it's a pause cycle. We have concerns. There's bank concerns. There's debt ceiling concerns, blah, blah, blah,
Yeah, and we've got some, thank you to the producers for putting this up. They grabbed us a little bit of highlight notes here. Fed minutes, Fed staff continue to forecast mild recession starting later this year, followed by a modestly paced recovery. Fed minutes, several participants said if the economy evolved along lines of their outlooks, further policy firming might not be needed. Fed minutes, participants generally agreed that the extent to which further interest rate hikes may be appropriate had become less certain. So it sounds like from those 3 points there that we're getting kind of a softening tone across the board. Now, this is, of course, starkly different. If you're reading just, if you read headlines from several months ago, it was just, we remain insistent on getting our inflation mandate under control, and it was just this regimented stormtrooper approach. Now you have kind of the opposite extreme, where it's kind of like a backpedaling of what was said there. So an interesting, like you said, several things in front and center with the markets as we go forward. You've got the debt ceiling concerns, you've got banking concerns, credit concerns. These things are going to likely turn the boat, I think, or assist in turning the boat for the Fed going forward. So it's an interesting time. And of course, the S&P trading lower. It seems like basically everything must have come out. The things that are coming out were right on with what the market was kind of expecting. So that's why we're not seeing, for those of you guys who are wondering why we're not seeing big spikes, this is kind of why, right? The market's forecast seems to be spot on for the time being.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.